More to get to here on a Tuesday morning, including today's start of a key two-day meeting by the Federal Reserve. It is being closely watched by Wall Street and American consumers, with looming questions about the health of the U.S. economy and the future of interest rates. Here to break it all down is NBC's senior business correspondent, Christine Romans. Christine, seems like we've been talking about this for a while now.
Right.
The meeting is upon us. I know you've been saying that we should expect to see a cut of some sort. Is that still the case?
I think so. And here, look, the Fed has not moved on interest rates since late last year. And so these high interest rates have been, a pinch for a lot of American families. But what the Fed is navigating here is inflation that's still a little too high for the Fed's comfort, but a job market that appears to be weakening. So the Fed, to support the job market, likely to trim interest rates here today. And that's what this is really about. You've got a 4.3% unemployment rate, but underneath the hood, there's some signs that job growth has been slowing. You've got long-term unemployment, people who've been out of work for 6 months or longer. That number is starting to tick up close to pandemic, or, like the highest it's been since the pandemic. Just starting to watch these numbers, and likely the Fed's going to cut rates to support the economy.
So if we do see a trim, obviously great news if you're trying to buy a house or a car.
That's right. We've had these mortgage rates and interest rates at large have been just stuck here for almost a year. So you've got a 30-year fixed rate mortgage that's already been drifting down because in the market they're expecting the Fed to cut rates. So that's the best 30-year fixed mortgage you've seen in 10 or 11 months. Credit card interest rates, you don't need me to tell you that number there is not a good number, 20%. That credit card debt is dangerous. So be careful. High interest rates have been a problem for credit card debt. And car loans at 7%. If you get a cut tomorrow and then you get maybe another one or two later this year, that will be a little bit of relief for people who are borrowing money.
Well, we have you. Before we let you get out of here, let's talk about TikTok here for just a moment. I know you're huge on the top. But there was some news yesterday that dropped about a possible deal.
Is it really called the talk?
I just called it that. I'm sure it's
that
not.
shows who is on TikTok.
Correct.
Yes.
Correct.
We are in the same boat here, my friend. No, look, it looks like there's a framework for an agreement. The president and the Treasury Secretary has said to keep TikTok operational. For those of you who don't know what it is, it's a very popular social media site that a lot of kids are on all the time, and grown-ups too. And there were some concerns that this was going to go dark maybe Wednesday because, the U.S. Congress had voted to ban it, to close it. But it looks
under the Biden administration.
Under the Biden administration, that's right. In the first Trump administration as well, there had been an executive order to close it down as well. So looks like there's some sort of a deal for maybe some U.S. ownership. We don't know who. We know that maybe on Friday, the president of the United States and the president of China are going to speak and maybe announce the framework of that deal.
All right.
So
Christine
TBD,
Romans.
stay tuned.
Thank you. Thank you, Christine.
Hey, thanks for watching. And don't forget, you can catch the Today Show every morning on NBC or take Today when you're on the go. Just follow the Today podcast on Apple Podcasts, Spotify, or wherever you listen.